Friends, today we will start to learn how to deduct TDS on foreign payments. It is a very important topic for making any foreign payments. Before we start with the video, I would like that you must subscribe to my channel Tax Acharya so that you will be keep updated with all the latest tax information. So let us see what is foreign payment. Foreign payment can be made for import of goods as well as service. We will only discuss only import of service because TDS is applicable only on the service and not on goods. Import of service refers to provision of service from a non-resident to any resident for which payment is made in foreign currency. Payment is made to the non-resident. This point is very important. So any payment you are making to non-resident for any services, then you require to examine whether TDS is applicable or not applicable under section 145. Under section 195, TDS is applicable only when payment is taxable in India, otherwise not. To do that, you require to examine the following: whether under section 5 same is received or deemed to be received in India, or income which is accrue or deemed to accrue in India. So section 5 required to examine. After that, suppose the income has been received or deemed to be accrued in India, then we refer section 9 and then we decide whether this income is taxable in India or not. On that, the important part is business connections, the dividend, interest, royalty, and fees for technical services. Now, how to determine the rate of withholding in relation to a taxable foreign payments? Once it is determined that transaction is taxable in India, the next thing to do is refer section 115A or section 195 of the Income Tax Act to determine the rate of tax applicable in India. Applicable tax rate in case of income referred above is given under: interest at the rate of 5%, dividend at the rate of 20%, royalty at the rate of 10%, fee for technical services at the rate of 10%, and in case of permanent establishment, it means if I have a branch in India, then 40%. These rates will be subject to surcharge and education cess, which are given below. Once the withholding as per income tax is determined, the next step is to analyze the provision of the double taxation avoidance agreement, which is called DTAA, entered by India with the relevant country, and determine as to what is more beneficial and deduct tax accordingly. Now, we'll take few examples, and with the help of flowchart, we'll make very simple for you how to determine whether TDS is applicable on the following payments or not. Few of the examples of royalty payments are engineering services, marketing and sales software, sales navigator subscriptions, online learning membership, subscription and memberships. So if you are doing that, then these are the example of royalty payments, and this are royalty payment is taxable under section 96. So now we'll see whether how to determine whether it is at what rate TDS is applicable on royalty payment. You can see a flowchart. So the first is that whether it is taxable under section 916. Now you ask first questions whether the vendor have a P in India. You require to ask vendor, then he will declare yes, I have a P or I don't have a P. If he has a P, deduct 40% plus surcharge and cess. If we say no, I don't have a P, the next question you ask, do you have a PAN, Indian PAN? If say yes, then ask for a valid Form 10, and if we provide, then TDS will be at the rate of 10% as per DTA. If we don't not able to provide Form 10, then TDS will be at the rate of 10% plus surcharge and cess as per 116.15a. In this case, vendor say I don't have a PAN, then ask for the TRC. If we provide a TRC manually, then again you can deduct at the rate of 10% as per DTA, and if you don't provide TRC, then deduct at the rate of 10% plus surcharge and cess under section 115A. Please note that this manual TRC is right now applicable till March 20 31st March 23. We have to wait and watch whether same extension will be granted or not. So suppose the vendor don't have P, but he don't have a PAN, he don't have a TRC, then TDS is taxable at the rate of 20% under section 206AA. So I hope this flowchart will provide you in a very short how to deduct TDS on any software license or subscription fees. Next, we will see few example of fees for technical services, which is called FTS, like patent filing charges, sales lead generation, strategy, and campaign design. And now let us see how what we call FTS is taxable. It is taxable under section 917. And again, we ask whether you have P in India. If say yes, 40%. If say no, we'll ask whether you have a PAN. If say yes, then we direct ask for a form 10F. If you provide form 10, again, withholding tax at the rate of 10% as per DTA. If no, then TDS at the rate of 10% as per 116 to 15A. If you don't have a PE, if you don't have a PAN, but you're able to provide a manual TRC till 31st March 23, then yes, you can go with the same route. If you say no, then deduct 20% under section 206AA. So it's almost similar to the royalty. So here again, you can see how FTS, you can determine how tax is chargeable on this payment. Now, next we will see whether payroll processing charges, visa processing charges, associated membership. This is called business income. Okay, so they are not FTS, they are not royalty. So we first question will ask whether you have a P in India. If say yes, 40%. If say no, we ask for a PAN. If provide PAN, then no TDS. If you're not able to provide PAN, then we'll ask, okay, provide me TRC. If you provide TRC, manual till March 23, no TDS. If you're not able to provide TRC, then deduct TDS at the rate of 20% under section 206AA. So with that small flowchart, again, you can understand either the income is taxable, fall under the definition of royalty. If not, then fall under FTS. If not, then it is business income. And then with that, you can determine how whether the payment is taxable in India and also how to determine at what rate this TDS will be deducted. Okay, so whenever you are making payment, please refer section 916 and 7 for definition of royalty and FTS, and then determine whether this is taxable in India or not, and then follow the flow chart to determine at what rate this is taxable. You're required to collect few documents like TRC, PAN, and no P declaration from the vendor every year. Remember, every year. Okay. So as I said, documents required to avail the benefit of DTA. If you want to avail the benefit of DTA, you're required to get few documents like Form 10F, tax receipt certificate, no P declaration, PAN. So if you get this document, then only you can claim what you call the benefit of DTA, otherwise not. And in case the vendor whose payment is taxable in India, he don't have a PAN, still he can get the benefit of DTA under section rule 37 BC if we provide TRC. And the TRC contains generally name, email ID, contact number, TRC details, tax numbers, all small details are there. There's no format. You can provide in any format, Form 10F, and then get what you call the benefit of DTAA. Now, what are the details required to submit it to bank to process the foreign payments? Invoice, you get what you received from overseas vendor. Form A2, Form 15CA, which you require to file electronically, and Form 15CB, which is required to file with a chartered accountant on your behalf. So all these documents required to make a vendor overseas vendor payment. So with this, we come to the end of this session. I try to keep the topic very small, very crisp, so that you get a very what you call fair knowledge how to deduct TDS on this foreign payments. And the case you have any questions, please write on comments with you. Please write on the comments with your email ID. I will definitely get back to you as soon as possible. Thank you.